All right. Well, hey, good morning, everybody. Hope you got yourselves a big old cup of coffee or whatever, so that way we can get in and talk about 10 of the trending articles in the crypto news space for today. Oh man, first things first, thank you to all those who have subscribed. And as always, you can find links down in the description. They'll take you to all the articles discussed, so that way you can do your own research. And then, leading off, my name's John, so let's jump in and get started. So, Swipe is the latest project that's integrating Chainlink's price oracles. Ooh, yeah, Chainlink gets another win, and this is a pretty good one. So, Swipe wallet and crypto debit card platform integrated Chainlink data oracles to improve the accuracy of reward issuance and token burns. Pretty simple utilization there, not too bad. So Swipe CEO Yoslito Lizarrando, oh boy, I'm starting off the video butchering it. All right, said Chainlink's decentralized price feeds will provide more accurate and fair token conversion prices for users, and it was an important step towards greater decentralization. It helps bring transparency and all that type of stuff, and lets them, move their custodial stuff. It's a good little thing, and any integration for Chainlink is just icing on the cake at this point, because as we all know, Chainlink is on a rocket ship to the moon, quite almost literally. I believe it's sitting in the $16 to $17 range, when I think it started off the year around $4. So almost quintupling in price in 6 to 8 months. It's pretty darn good. So, Cointelegraph asked Lizarrando whether the rising price of Link concerned him, as consumers of Chainlink data have to pay with Link tokens for their data calls. He did acknowledge there is a fee structure, but he didn't really disclose any details. So, we don't know. I don't know how much those fees are for their data calls, and if they can be adjusted, or if Swipe might subsidize them partly, since they're forcing you to use this. But it's not a bad idea to ask that question. I wish he had given a better answer. Swipe, the CEO, also declined to disclose statistics, oh boy, about their debit card transaction volumes, besides saying that they have 500,000 users. Hey, 500,000 people using it ain't too bad. And as you all know, Binance is the majority owner for Swipe. They're using it to piggyback, because they'd been looking into their own debit card for a while, and they were going through the process, but it just ended up being easier for them to buy out Swipe, so that way they can use it. CZ, CEO of Binance, I know he had said that a lot of cards should be going out here to European customers this month, so it's moving. But he did say, Lizarrando, that the company has preserved its operational independence, which I do like. Any business that takes over another definitely needs to allow some type of transition period and let the company retain that independence, because you're buying them for a reason. You're buying them because they're successful, because they're good at what they do. And your investment in them, you shouldn't be trying to turn them into something they're not, because then you lose out on what made them special in the first place. I've seen that happen all too often with businesses that I work for. Company comes in because we're a cool new startup or property that's done really well, and they go, oh yeah, no, we'll let you do your thing. And then before you know it, they're forcing you to conform to all of their standards and policies and procedures, and before you know it, what made you is gone, and the people and the company that made the company are gone, and it's left a shell of its former self. A failure. So it's good to hear that Binance doesn't seem to be doing that, but if that's of course what the CEO is saying, and what else is he going to say? So we'll keep an eye on this. I'm going to keep an eye on this. Good for Chainlink, good for Swipe. Integrations with each other, this type of cross-platform binding together is good for the space and the industry as a whole. But let's hop over to article number 2. Spend a little bit of time talking about old Cardano. It's hit a few nice major milestones. So the Cardano Shelley mainnet entered its third epoch a few hours ago. An epoch would be, similar to, a block on a proof of work blockchain. Their epochs last 5 days, which is pretty long in my opinion, but that's the way they do it. But they entered it a few hours ago, and with Epoch 2 that started on August the 8th, the first blocks were produced through Input-Output Hong Kong and Emergo, but at the start of Numero 3, external stake pools were authorized to validate blocks for the very first time. So things other than Input-Output Hong Kong were doing it. So the first product was produced by the stake pool 1%pool.eu. Good for them. Furthermore, within the first 7 hours after the start, 75 different stake pools had gotten to create a block. So good for them. I'm really excited for everyone who's staking and will be getting a reward come the next epoch. I'm curious to see if the pool I assign mine to will give me anything on this go round. It's kind of like the lottery. I'd just be so happy even if it was just like 2 ADA, just to know I earned it. Well, not earned it, because I didn't really do anything other than stake my share, but it's just kind of cool to be a part of this. I really do enjoy Cardano and the interaction with the community. So that's just me. So with epoch number 3, community-driven stake pools will now validate just 10% of all blocks. While the federated nodes, the IOHK, the Emergos, the Cardano Foundation, those will initially create 90%. Each epoch, that number will increase probably by 10% as Cardano moves from this federated system to a fully decentralized one. This gives them time so that way if there's issues and stake pools aren't, performing correctly or there's some other code issue, at the very least the federated nodes can take over and prevent any collapse of the network. So it's basically a safety measure. They're doing things correctly. They're not jumping the gun, as we saw with good old Yam Finance yesterday. Failure can be pretty massive, and it can be chain ending. We'll see if they recover. A lot of projects do, especially if the people behind it are committed to it. But we'll have to see. But hey, during the video that old Hoskinson point out, node version 1.18.1 had to be rolled back due to an edge case, which is a problem or a situation that occurs at a very extreme operating parameter. So nothing like crazy, but they were like, ooh, hey, if this number of circumstances occur, this might happen, so let's roll it back to a more stable version. And a new revised version of it will be released on Friday. And they also mentioned the fact that Cardano has over 1,000 registered stake pools. That was something that they were hoping would happen down the line. They didn't think they were going to get 1,000 by epoch 3. They thought it was going to be by the end of 2020 or maybe sometime in 2021 we'll hit that $1,000 mark. So it's really cool. The more stake pools, the more decentralized the network and all that fun stuff. So I'm pretty happy with it. I'm pretty happy with how Cardano's handling this whole thing. Slow and steady wins the race. As long as you're providing consistent updates. Shot across Ethereum's bow right there, which we're actually going to jump into just next. But really happy with Cardano. I think you guys should be too. As always, I'm some dude with a microphone. Don't just believe me. Do your own research. But I really do like Cardano. Okay. So Ethereum, we gotta talk about it, guys. It's up 10%. It's 420. Nice. But the total value outstanding from Ethereum Futures, those contracts just reached a new high of $1.5 billion. And they're saying it was spurred by Ethereum's price finally breaking above 400 all the way up to 420. Nice. So the value of open Ethereum futures grew twice as fast as Bitcoin's since February, which is also pretty darn interesting if you ask me. But then that could just be Bitcoin was the first to have all these future options, dropping all these things. So it's had its explosive growth phase, and now it's just a gradual increase of users versus Ethereum might be just, more and more exchanges and places are starting to list those futures. And that's kind of what's causing this growth. It's the new thing. But that's just me speculating. I don't actually know that to be the case. So, futures, also known as open interest, reflects the current total value of Ethereum futures that have not been settled yet. Futures form a form of financial derivatives where parties agree to sell, buy an asset at a specific price on a specific date. Futures are contractually binding, not unlike options, and must be settled on the expiration date. So you have to buy it, interestingly enough. Not sure how that's going to go for some people. Personally, future contracts make me nervous. I don't like trading in them just because you're speculating so much when there's so many factors in play. Like, I like trends, like, oh man, this cryptocurrency that's been doing great just had this insane drop for no apparent reason. Yeah, I'm going to buy that because it's probably going to return to its pre-drop levels relatively soon. Like, those are the type of, deals I look for personally. I don't really like futures unless I really am confident in cryptocurrency, which in the world today, I'm not really confident in anything. But, so, Nicholas Pelikanos, head of trading at NEM Venture Fund, cited the break of 400 as the main catalyst for this latest futures all-time high, stating that since 2017, the $400 price range has acted as a key level in Ethereum's price history. The break of this level technically is very bullish and is likely the cause of the large volume on Ethereum futures. I agree. Though, of course, there's issues, with supply fees, transaction fees, and all this stuff. Basically, Ethereum needs to get their crap together to help this continue. Over the last 6 months, the open interest of Ethereum futures grew twice as fast as compared to Bitcoin, noted Larry Sarmak, director of research at Dublock. Ethereum has been on fire lately. The industry of tokenization and new wave finance seems to be in a sort of consolidation around the network and will continue to build a vast majority of new crypto-fangled projects on the Ethereum blockchain. I mean, Ethereum has been having a pretty good year. It is mimicking, in my opinion, 2017 in many, many ways. The ICO boom led to this crazy growth period, and then its collapse due to the Fed and other countries stepping in caused the retracement to the crazy low levels we saw throughout most of 2019. So it's good to see things are robust. I think DeFi's they're different than ICOs, so I don't think that retracement will play out in the same way. Plus, institutional investors and interests have only increased. And I think that demand will drive even higher prices than what we've seen before. So I'm very interested to see. I'm hoping that this is the year, like holiday season this year. Barring anything crazy, which is entirely possible. I'm really hoping for some 2017 level craziness that pushes Bitcoin, Ethereum, and any coin to crazy new all-time highs. I think it'd be really cool if we get this long promised 100k Bitcoin. And I'm just hoping that Ethereum is, if you get 100k Bitcoin, I think Ethereum should be worth a tenth of that. Maybe that's too much. Maybe be less. But I think that'd be a really cool number. Honestly, that would let me and the wife do pretty well. Put a down payment on a good sized house. It would make me feel a lot better about my life, as I'm sure it would make all of you feel a lot better about yours. But hey, let's hop over and talk about some of these institutional ones. We're going to keep talking about Ethereum a little bit. So according to anonymous sources over at Block, which we referenced in the last article, financial giant JPMorgan, which owns Chase Bank, it's JPMorgan Chase. It is in advanced talks to make a $20 million investment into ConsenSys, which is an Ethereum development studio that could receive it as part of a $50 million investment round, according to sources, which would be pretty big. JPMorgan was pretty anti-crypto for a while. I actually don't believe I can buy crypto with my Chase credit card yet. Hello, JP. Fix that, especially if you're doing stuff like this. They were pretty negative on cryptos for a very long time. So in addition to this, ConsenSys could merge with JPMorgan's blockchain development unit Quorum, The Ethereum Development Studio would be responsible for the support and maintenance of Quorum. JPMorgan had already started negotiations with ConsenSys in February of this year. Didn't cite a source there, and they're citing an anonymous source up there. So take everything I'm saying with a huge grain of salt. But ConsenSys merging with their development unit be pretty interesting. Again, I would want to know how Ethereum or how ConsenSys then maintains its operational independence with a big company like that. But that's just me. So, among the products developed by JPMorgan's blockchain unit is the JPM coin, which is designed to be a stable coin similar to Tether. It's housed on the Quorum blockchain, and it's a business-to-business money transfer medium. So they're integrating the technology into their business because they know it's better, despite what they've been saying publicly for years. That type of development doesn't just happen overnight. So they've been a little bit two-faced about their stuff, personally, in my opinion. So ConsenSys, for those of you who don't know, was founded by an Ethereum co-founder, Joe Lubin, in 2017 during, the crazy bull market. Recently, the startup has suffered considerable financial setbacks. At the beginning of the year, they had to lay off 14% of their employees and began planning an internal restructuring. So this $50 million round of funding could be much needed for them, and both parties would stand to benefit. So should the rumors be confirmed, the company would alleviate a lot of its financial problems, and then the development of Quorum would accelerate, and it could keep pace with the changes expected for Ethereum when Ethereum 2.0 finally enters phase 0. So that's kind of, that's kind of like the justification for this. Like, look, we'll give you the money so that way you continue to operate, but you have to take over this for us. It's really, really important to us as a business, but we're not blockchain people, so we want to bring outside experts in to help push development along. Makes sense to me. Both parties benefit, and JPMorgan's investment in ConsenSys could also just be another indicator of growing interest in quote-unquote traditional market, as in blockchain technology and cryptocurrencies. They're developing their own business-to-business blockchain-based stablecoin. Like, they are definitely getting into it. A lot of different places are. And that's actually going to lead into article number 5 here in just a second. But good for ConsenSys if this is what they want. If they're kind of being backed into a corner, they're essentially making a deal with the devil. I feel for them. I will say I do like the user interface with Chase Bank, but I don't really like the company overall. But I feel like that's how I feel about a lot of major companies. So 2020, everyone. All right. But hey, China... Oh yeah, we got to talk about their central bank digital currency, or CBDC. They announced today it's going to be expanding the trials of it to include Beijing as well as Taijin and Hebei provinces. So they are just pushing it through. So according to an August 14th report, today, report by the Wall Street Journal, there is not yet a set time for when this expanded pilot program of the CBDC will begin. Just that they're expecting to complete it by the end of this year. So as Cointelegraph had reported earlier this week, the expanded pilot program will also include the Hong Kong Greater Bay Area, which consists of 9 cities, including Guangzhou, Shenzhen, as well as Hong Kong and Macau. We talked about that in a previous video. They're very different in terms of how they're governed, both legally and economically. So having this overarching CBDC program is the type of thing that they can really just throw it in the fire and see where it breaks and where it bends and what they need to do to improve it going forward. Not a problem. So the CBDC, they call it domestically the Digital Currency Electronic Payment, or the DCEP, and it's expected to be the first operational national digital currency. So China is going to be hitting that milestone first, which is kind of crazy. And this is normally the part in the video where I talk about how the Federal Reserve and the United States needs to get on it, but we're going to talk about that in article number 6. Just know that China is moving full steam ahead. Not too much news in regards to their blockchain service network as of late. I don't know really what's going on there, but I'm going to keep an eye out for that and update you guys as accordingly. But all right. Ooh, man, my back is still twinging. It's been a rough week. All right, guys, let's hop on over to article number 6 here in just a second. All right, well, hey, as I was mentioning before, China's got this whole digital currency and the Fed needs to get its butt in gear. It looks like they might have been this whole time. So the United States has finally joined the bandwagon of countries testing a central bank digital currency. Governor, Lael Brainerd said during a virtual technology event yesterday that the United States Federal Reserve, in collaboration with research team from the Boston Fed and the Massachusetts Institute of Technology, or MIT, which everyone around the United States knows from various movies as being this crazy, crazy hard place to get into that gets to do all the cool stuff, is conducting experiments with a hypothetical digital currency. So according to Brainerd, both institutions have been researching blockchain technology for several years. Several could mean 4, several could mean 2, several could be him exaggerating. It could be MIT was doing it for 4 and the Federal Reserve got into it 2 years ago. It's a little vague. To see how, but they're doing it to see how a central bank can utilize it for a digital dollar alongside the effect it might have on our existing financial system. He did note that the central bank has not yet committed to issuing a central bank digital currency. Should the experiment become successful, it is strictly for research purposes, but at least they're doing something. Oh my god, I'm so excited. Oh god, for the United States to continue to compete, they need to be at the very least exploring this, and oh my god, they are. Once again, the United States of America does the bare minimum needed. We'll see how it goes. Don't at me for not being patriotic. I think the most patriotic thing you can be is to point out the flaws in the system that exist and try to fix them to make the country better. So, America is by no means perfect, but it has been the sole world superpower for 30-some years now, though that is being challenged on multiple fronts, and currency is one of them. So having this in their back pocket is pretty good. So any formal process that would be required before the Fed can issue or use the currency would be required, and that decision would involve the government, other stakeholders with many legal questions. Brainerd also noted that the Fed has not started the process, nor has it decided to start it. They are just researching it. So leading the project, James Kuna? We'll say Kuna. Kind of like tuna, but with a C. The senior vice president at the Boston Fed explained that the first step is to develop an engine and the software that can meet the needs of a CBDC for a country as big as the United States. You need to look no further than China. It's big territory-wise, but it's very concentrated population-wise, so it's kind of analogous. It works. They're comparable, kind of. According to Kuna, some of the significant changes involved in the project include large transaction volumes, security, and privacy, like the standard problems that all crypto projects have. So, but I think a little bit about China leading the race. Look, I don't have much to say about this article other than finally, gosh, I've been wanting this for so long. To know that they've been working on it secretly all this time makes me feel much better. You can't have just one country doing anything, just like you can't have one business doing anything. You need competition. That's how everything gets better. If there's a monopoly, people get complacent, quality slips, and prices go up unfairly. So, hopping on over to article number 7, we got to talk about DEXs. Yeah, good old DEXs, or decentralized exchanges. Their trading volumes in the past week surpassed all of 2019's volumes. So in 7 days, almost 2.5 billion in value was captured, and that was 2.4 billion in 2019 as a whole. And more than $13.8 billion in volume has passed through DEXs so far in 2020. Dear Lord, that's a lot. So in total, more than 3.8 billion in value has been captured this month, and we're not even halfway through. As a result, trading volumes are looking set to beat the 4.4 billion traded last month. Put that in perspective, in August of 2019, just shy of 1.8 billion was traded, which was much, 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 much lower. So it's pretty insane, the volumes that we're dealing with right now. The biggest differences are that Ethereum-based DEXs use smart contracts to facilitate transactions, which let users avoid hurdles like Know Your Customer, KYC verification, and don't relinquish custody of their coins to an exchange wallet. So there's some pretty interesting stuff with that. I'm sorry if you can hear that. Apparently my neighbor on the other side of the duplex is turning a very squeaky faucet. But hey, a lot of this has been provided by Uniswap and Curve. So Uniswap captures half of all volume on DEXs, or close to half. It saw a volume of 1.7 billion in July and 2 billion in just the first half of August, which is just insanity to me. Just insanity. So the second most popular DEX was called Curve. It's pretty good for swapping between stablecoin assets, and they released a governance issue on Thursday, and they scooped up 27% of the total volume in the past 24 hours, amounting to almost $125 million. So market share, DEX volume over the past 24 hours, Uniswap is sitting at just shy of 47%, with Curve capturing 27%. So those two make up almost 75% of the almost 75% of the volume, which is just insane to me. There's a lot of others. You have Kyber, OX, DY, DX, Synthetics, Bancor, IDEX, Oasis, Gnosis, Loopring, DDX. Like there's a lot of DeFi protocols out there that are doing some pretty good stuff. Just that Curve and Uniswap are making up the vast majority of it, so they're definitely two to keep an eye on. But this is another reason why Ethereum's prices are going up and transaction fees are skyrocketing, because so many people are using them. So, well, certain people are using a lot of them. So let's hop on over. This is more like a general article put out by CoinDesk. Didn't want to touch on it because you could argue that, the economy is in the worst shape since the early 20th century, and stocks are strangely soaring. The U.S. government's borrowing is expected to triple to $4.5 trillion this fiscal year, and yet 10-year Treasury yields are close to historic lows. It's a very, very weird year. A report Thursday showed that the U.S. jobless claims fell to 963,000 last week. It's the first weekly figure below $1 million since March. And my opinion on this is thus. There's only so many jobs that have been affected. Like, there's a limit to how many jobs, and you've had over a million jobless claims since March. So we're talking 6 solid months of every week, 1 million new people going on unemployment. Yes, some have come off, some have gone on, come off, and then gone back on. Some people no longer qualify, and some people are being forced back to work in unsafe conditions because of the end of the $600 a week federal benefit that was provided in addition to most states. Which, look, was it keeping some people from going back to work? Yes. Was it because they were making more money? Maybe, but a lot of people weren't going back to work because they were afraid to go back to work, and this is kind of forcing them. So it's kind of weird, but yeah, I digress long enough. So in the logic of financial markets, the improvement that we saw with jobless claims finally just falling below 1 million, still awful by any other stretch of the imagination, the improvement was seen as neutral or even negative, since it might relieve pressure on authorities to speed up more trillion-dollar stimulus packages. So we kind of need it. Like, I don't know what your households are looking like, but we went from a two-income household to a one-income household, and then a pay reduction one-income household. So it's pretty rough on our end of things. I don't know how it is for you. Some extra, stimulus packages would be nice on our end. Like, we're not in danger of going bankrupt or losing anything. It's just that extra stimulus package. Another round of $1,200 payments would go pretty strongly over here. It would help us stay where we are. So, Bank of America analyst Anastasia, Vamvakidis acknowledged last week in a report that it was hard to tell if the dollar's recent slide in the foreign exchange markets was due to the ebullience over the easy Federal Reserve monetary policies or fears that the U.S. currency might be at risk of losing its status as the dominant world currency. I'd say a little column A, a little column B, personally. But for whatever reason, Bitcoin is up 20%. It's up 64% in 2020, dear Lord. It's more than double the gains for record-breaking gold. Prices for Ethereum have tripled due to the fast growth in the DeFi markets. So there's a lot of going on. Leonard Neo, head of research at Stack Funds, wrote on Thursday in a report that Bitcoin might do well in any currently plausible market scenarios, that it's a risk-on hedging type asset where it performs relatively well in thriving markets, yet acting as a hedge to global uncertainties, displaying financial attributes that fall between that of equity and gold. So kind of a hybrid of the two. I do like that analogy, and I agree with it. Mentions are becoming more common in mainstream publications of crypto as well. The Financial Times reported Thursday that crypto hedge fund managers have returned more than 50% through July, with the low single-digit gains for traditional hedge funds generating across traditional asset classes. So just a lot of different perspectives and articles on how this year is kind of screwy, but strangely enough, it's the perfect market for crypto. But some people are saying, well, any market would be a good market for crypto. I would say they're probably right. It's so young that a plausible argument can be put forth for multiple different scenarios, and that doesn't preclude anything because there's not a strong history. Like with gold, we've been using gold for 12, 14, 15, 16,000 years. As far back as humans have been able to find gold, they've been using it in some way, shape, or form because it's shiny and we like shiny things. We know how that price is going to act. We know how it's going to behave. Stocks have been around for 5, 6, 700 years. We know how they're going to behave. Bitcoin, cryptos, they're so new. None of us are really sure. So honestly, we're all kind of making stuff up as we go along. And if enough smart people said, well, I think it's doing well because of this, we go with it. That's just it. But all right, I'm going to wrap things up with 2 back-to-back articles about the Winklevoss twins. They each focus on different parts of the same interaction with Dave Portnoy. So, according to data from Crypto Compare, most of yesterday, August the 13th, Bitcoin was hovering around 11,500. However, for whatever reason, Bitcoin started rallying, and with 4.5 hours, it managed to get above 11,800. So, what happened? Well, we can't be certain, but it is interesting to note that this was the time that Dave Portnoy, founder and president of Barstool Sports, sent out a tweet with an attached video showing him buying Bitcoin and Chainlink with the help of the Winklevoss twins, co-founders of the crypto exchange Gemini, who had accepted his invitation to come to his house and explain Bitcoin to him and show him how to buy crypto. Interesting. So, he started off the video by saying he put $250,000, just a cool $250,000, nothing major. That would just, buy my dream house, whatever, into his Gemini account. Although we can't see the screen of Portnoy's laptop, it does appear from the conversation that he's having the video that he invested 80% of his $250K in Bitcoin and 20% in Chainlink's link. So $200K into Bitcoin and $50K into Chainlink. Not too bad. What makes Portnoy's interest in Bitcoin significant is that he's the leader of an army of day traders on the U.S. trading platform Robinhood, and that his promotion of Bitcoin could help increase the adoption of Bitcoin by his over 1.7 million Twitter followers, many of whom are millennials. So that's kind of the argument they're putting forth here. And I do agree with it. He does have massive reach for a person. He's in that type of finance field that's set to draw active users. And he uses Robinhood, which is very great at getting a lot of people into something quickly. So I can see the argument here why people are saying this could be huge. I do think it's good for the long term. I do. It is very good for the long-term success of the cryptocurrency space, for the Winklevoss twins to talk to people, large social influencers like him in that field and in other fields, and kind of like entice them to look into it and buy it and share it with their followers and things like that, because that helps drive adoption, and that will in the long term drive prices up. Will it lead to a massive crazy bull run like everyone's hoping? No. Same thing happened. I let myself buy into the hype with the grayscale thing. Yeah, it'll help, but it wasn't that good of a commercial. It's not going to do anything crazy, like just like that. But hey, but I'm going to round this out with the other half that they didn't talk about in this first article. So Dave Portnoy interviewed the Winklevoss twins, and they suggested that Bitcoin is a better investment than gold because the metal supply will increase after Elon Musk starts mining some asteroids. Okay. They were quoted as saying, there's billions of dollars of gold floating in asteroids around this planet, and Elon Musk is going to get up there and start mining them for gold. And that's why gold is a problem, because the supply isn't fixed like Bitcoin. Portnoy asked, is that like a real statement? To which the founders of the Gemini cryptocurrency exchange replied, yeah. I mean, they're not wrong. Like, this is not some far-flung like thing they're putting out. It's just insane to me that we're having conversations like this. To further reiterate the idea that gold is inferior to Bitcoin, one of the twins said that gold is for boomers and that Bitcoin is the only fixed asset in the galaxy. I'm gonna laugh so hard I give myself hiccups. Ooh, oh man. Like, I agree with them. I actually agree with them. It's just insane that I'm agreeing with a statement as weird as that. So actually, for those of you who might not be unaware, space mining for gold and other resources is not new. In fact, Planetary Resources, a firm planning to mine asteroids for profit, was founded in 2016, and they've raised $50 million in funding. Some predict that with further development of space travel technology, we could soon see, probably in the 2030s, 2040s, a new space race between private companies that are looking to mine minerals in space. I mean, we need a lot of gold for technology. They're in all our circuit boards and microchips and all that fun stuff. We're going to need more of it. Where can you go to get more of it? Well, it's just floating up there in the asteroid belt. You just got to get out past Mars. And once we develop the autonomous, technology, you don't need a human being. You just need a very strong, stable, automated system. You could send an automated ship out there. Who cares if it takes 3 years to get out there, attach itself to an asteroid, do its mining, and then come back? Because there's no human beings on board. So autonomous stuff like that. Once you get a good thing going and you're launching a ship every year, then every 6 months, then every 3 months, then every month, and you're getting regular shipments back of these ores and these, things, it could lead to some pretty interesting stuff with how assets are priced. According to CNBC in May of 2018, materials lying in the belt of asteroids between Mars and Jupiter hold the wealth equivalent to about $100 million for every individual on Earth. So of course people want to get up there and mine it. Like, the only thing that's holding us back is we are limited by the technology of our time. But hey, that does it for 10 of the trending articles in the crypto news space. If you've made it this far through all my stories, my waxing and wanings, why not subscribe? It really helps me out. It does. Lets me know that I'm doing something right. That way you can get more updates as I try to post videos every day to keep you up to date, both on YouTube and on any major podcasting service. So, just subscribe to wherever you're listening to me to. But, all right, so let's jump in and take a look at top 10 coins by market cap before we close things out. Oh, look at that. Up to $10 in band. That's cool. All right, so Bitcoin up about 1.6%, 700. Ethereum sitting at 427, up 8.5% on the day, roughly. XRP's up 5.9%, roughly, 29 cents. Chainlink's actually down by 1.8%, still sitting at $16.66. 666. Bitcoin Cash up 3%, Bitcoin SV up 3%, Litecoin's up 3.5%, Cardano's up 5%, and Binance Coin's up by 9%. Good for Binance Coin. They're doing pretty well right now. Looking through the that 10 spot, it seems to be shuffling through Binance, Crypto.com coin, and Tezos, just back and forth, back and forth, back and forth, back and forth. Going down, Tron's up 13.9% today. Boy. Looking for anything crazy going down the line. Algorand's up 15%. Good for them. Yeah, I'm trying to look for any like double digits. Waves is up 10.24%. Icon's up 16%. Quantum's up 11. Oh, Omnivise Go's up 10. Loopring's up 16. I don't even know what some of these projects are. Ooh, man. Oh. Whatever this Numenaire is down 20%. Quant's up 11. So, not too bad. Top 10 wise, it's a pretty green day overall. The past couple days were pretty red, so it's nice to see us back on the upswing. I hope your investments are doing well. I'll be back to talk to you guys tomorrow. This has been fun. Again, my name is John, and yeah, see you tomorrow.